as has become the usual now, we'll go into the biggest FX news for this week. From that, we'll then let Andy decide which are the currency pairs that he would kind of be looking at, and then we'll go from there. And hopefully what this will do, when you're watching every week, you'll just start to learn via osmosis about some of the things that he does and some of the processes. So with that being said, mate, if you want to take it away, we can get started.
Yeah, absolutely. So hopefully you guys can see my screen. So we'll have a little look at the high impact news coming out. So we've got some bank holidays today. So if you're from the US or Canada, then today's your bank holiday. Mondays are generally quiet anyway. It's a good time to do your kind of weekly planning. I like to, if I don't get a chance to do it on the weekend, I like to look at my weekly charts on a Monday, just to kind of see how everything closed and what we might get for the rest of the week. Tomorrow we have the rate statement coming out from Australia, which is always a big deal, which will give us an idea of the sentiment towards any sort of future hikes. So that will be at 5:30 UK time. So just kind of be wary of that. And we've got the Bank of Canada rate statement on Wednesday with the monetary policy hearing. And then we have the same thing, the monetary policy statement from Europe on Thursday. So a lot of releases of statements, and statements can be kind of volatile. And we have the ECB press conference again, that can be very, very volatile. We have the Bank of Canada's governor speaking at 5:30, so that will kind of be following on from the rate statement. So we have the rate statement, and then this could also have an impact the next day. And a lot coming out from Canada, and then we've got the employment numbers as well. So that's interesting as well. So there's a lot coming out from Canada. I think Canada, the Canadian dollar can be particularly volatile this week. The most difficult things to trade are statements, but for swing trades, they can also be quite good, because a statement essentially reacts to what is being said. So so let's say you're looking for a swing trade, the market might react and it might fill you, and then it might react the other way with more words being spoken. So that's the thing. Whereas with numbers being released, it's generally one way. Okay, good numbers. So on Friday, good employment numbers, we'll see the Canadian dollar increase in value. Bad numbers, we'll see the Canadian dollar reduce in value. But these statements potentially can be very up and down. But like I said, it can work out in our favor sometimes. So if you're trading a currency pair like the Australian dollar or the Canadian dollar, for example, I would say that these are going to be great for potential swing trades, because you can look for a really good price to buy or sell. You don't necessarily, you can wait for the volatility to kick in, and very often, if you do the right technical work, it can spike you in, and then it can go your way. So, but they do carry more risk, because obviously the statement can go against you. So it's important that we get a good price. You've got a little bit less data on the euro. I quite like the euro in some respects, because it allows, because it's not coming out until Thursday, so there could be an opportunity to kind of front run the news. So be in the position beforehand, lock some profit in, and then see if the news goes your way. That's a safer way of doing it as well. So potentially for the start of the week, we could look at Australia or Canada, and for the middle of the week, where we can enter a position a bit closer to now, we could look at something like the euro. So let's bring the charts in, I think, guys.
So with that being said, with that being said, as a professional trader, you've obviously highlighted some there, but what springs out to you in your experience? Which pair would you kind of look at first based on that news information?
Yeah, I would probably if I was going to choose one, I'd probably start with the euro, because the news isn't coming out until Thursday. It allows us to get into a trade in a safer way, and to potentially, lock in a profit before a news announcement, and that way you can kind of have a risk-free trade potentially, so you're not losing any money. And then I'd probably consider some of the others like the Aussie and the CAD. But with that being said, I'm happy to analyze the euro here to see where we stand. Shall I go ahead and do that?
Yeah, let's do it.
Yeah. Okay. Great. So we'll take a look at the euro dollar and see where the opportunities are. And I'm going to start here with the monthly, which I showed a little while back, of what was going on with the monthly, and it's actually stayed here exactly what I thought might happen. It hasn't really moved. You can see it's just kind of sideways here. So I'm going to bring in the daily chart, and the other thing as well with this is that often, like especially before a news release, like the markets are in a range, and sometimes we need news to basically help us get out of that range. So if you can get in at a good price, and maybe at the bottom of the range or the top of the range before a news event, it can kind of pay off quite nicely. So this is essentially what's happening right now on the euro dollar. So we are bouncing off this support line, and unfortunately we're kind of in the middle right now, which is not really ideal. Ideally you want to kind of see it at the top or the bottom, where you can buy value and then hold it, and then you can kind of see what the market might do. But where we are right now, it's in the middle. So it makes it somewhat trickier, but we'll take a look and see if there's any kind of hidden lines here that might help us. And we'll see if there's an opportunity that we can take advantage of. So I'm just having a look to see where the market is reacting, and I can already see that this area here does carry with it some good resistance. We've had a good couple of rejections here. So yeah, like I said, ideally it's not great that it's in the middle here, but I don't think necessarily it wants to break out before a statement. So this could be, the range for the week. So this could be the top of the week. So certainly there with that sort of bearish candle formation there, that shooting star, we could be looking at potentially a pullback here. Similar to this, if you see here, we got a shooting star here, and then the market dropped. And then if you look here, guys, you can see that we also got a couple of shooting stars here, and then the market dropped. So there's certainly some room. I think if we're looking at short term, then you might want to kind of look at something like this old resistance here as a potential target. which is about 118. So maybe any kind of pullback, you could short it towards here. Let's have a little look at the lower time frames as well, and see if there's anything here that is interesting. That's very interesting. These are the lines that we drew in last time, guys, and you can actually see it's actually come to this line here perfectly, and that's exactly where it has failed. So I do like this. I think there's certainly some room to go to that sort of 118 area there. I think that's a good target. So potentially what we could look for is a Fibonacci pullback. Ideally, something like the 618 would be great. So if we just take our basic Fibonacci tool, and just a little point here, guys, you can see that this is an old resistance point right here. And an old resistance point here, you can see in the past it's quite reactive. This naturally becomes a support point. So right now, even though the market could go lower, it doesn't really make any sense. It's more likely to hold here, right? Because it's an old resistance that becomes a future support point. So I'd expect the market to hold, possibly pull back, and then we could be looking at some kind of reversal, possibly like a double top, where you can take it down to there. So if I kind of draw out the sort of thing that I'm thinking about, and just to sort of, I'll also emphasize something here. So let's just get our pen out just to show you. So old resistance becomes support. So you could be looking at something like that, potentially. We could go for the, we could have a look to see the 200 fib extension down. Let me have a look to see where that comes in, because that could be a good target. Let's have a little look. So where is the 618? I'll just get that out. In fact, I'll just take this blue. I'll take this blue line here, and I'll show you where the 618 is. The 618 is there. That comes in at 118.86. 118.86 potentially, and the 200 target would actually be around here. So if I just highlight these, I'll just change this color as well, make them green, just so you can see. So anywhere kind of in that zone could represent a decent value area to go short and to look for, you know, this is the 200, which is not far off what we said, 118. This is just literally 117.98. So it's pretty much saying the same thing here. And you always want to kind of come out of a round number. Bear in mind, guys, we are, you know, we are in a mini uptrend here. So I do know that, for example, if we just put in our uptrend lines, and that kind of really emphasizes something here. Look, we're actually on a support line here as well. So I don't know if you guys can see it or not clearly, but the auto lines have showed us that this is actually on a support line. So can you see that clearly on your end, Gavin?
Yeah, I can. Maybe if you just, for maybe people that can't quite see as well, if you just zoom in a little bit, they might be able to see it a bit better.
I'll tell you what, I'll just make it a bit thicker.
Yeah, that's better.
Yeah. Yeah, so these are the lines that have just been drawn in. So we're basically there. So I'd expect potentially that this market will hold here temporarily, and then eventually probably look to break that that support line there. Now, this could pull back deeper. It could pull back less. Generally speaking, the 618 is good because it's regarded as like the golden ratio. It's like a safe place to enter, and it gives you a decent reward to risk, with a stop above the high. So from that point of view, it's pretty good. So there's a lot of good, interesting things here. Like looking at, as I said, the daily chart. We've got a nice resistance point. We've got a shooting star, which has worked the last couple of times. On the 4-hour chart, we've actually hit our down market angle line there. You can see it's basically literally reached there we did this on one of the other previous sessions. It's also a week before a rate statement, which typically means that the market's not going to break out before that statement. So any kind of run up is an opportunity to potentially go the other way. Being devil's advocate, the only kind of thing that I do see that is bullish still is that the MACD is not diverging here. The MACD is still converging with that price. However, having said that, a target of there basically is not going to make so a target of there isn't ending the trend. So this is basically reflective of the trend. So you could catch that move down and still be okay. The other option, guys, if you want to play this safer, is to let that market come down to here. So if you don't want to go against that little mini trend, you could put a buy order around this sort of 118. That could be another way of doing it, and you can see if it can hold for a move higher. But just bear in mind, if there is a bearish sentiment to the statement, then the markets can just blow through those levels very quickly. So just have that in the back of your mind. And I think that's it. I don't know if there's any questions.
So just to clarify then, off that, just to be clear for people watching.
Yep.
So what you're saying is that potential short, that could be before the news announcement on Thursday, right? So you would be looking for that before to take you down to that 118 level. And then if there's some positive sentiment, the news comes out in line with or higher than expected, you would expect that trend line to resume. Whereas if the news is bearish more than what was expected, then basically you're just going to be trying to catch a falling knife if you set a buy limit on that trend line, correct?
Yeah, exactly that. I prefer to trade before rather than sort of putting an order in. I'd rather wait. So if rather than put the order in, I would wait for Thursday, because what we like to do is we also like to use our daily trading range tool, and using the multiple of 1.5, it allows us to really predict where the low might be. So if the news is bad, you could still use that tool to get in at the bottom of the day and then assess it by the end of the day to see if the news was dismissed and priced in, or actually it's made a difference. And you'll see that based on how the market closes. And it's, so you almost can kind of get almost a risk-free trade. I'm careful to say risk-free trade because it's not risk-free, but it's as low risk as you possibly can. And that's the preference.